Let's bring in our expert panel to discuss today's ISM and PMI data. John Grace, founder, president, Investors Advantage Corporation, and Steve Dudash, president, IHT Wealth Management. Thank you both for being with me here today. Let's start with you, John. Your thoughts on some of the economic data that we've gotten in thus far?
Well, we've seen both slip, right, Nicole, whether you're looking at the manufacturing PMI or the Institute for Supply Management. And in fact, on that one, I think economists were expecting some expansion about 50.5, that we're down to 50.1. And we were at 50.9. So some contraction in both cases. And is kind of scary, one executive in the transportation index noted layoffs are here. So things are contracting, and this has been happening for a fair amount of time. In fact, I think the first time I really watched this was with the IMF. Christine Lagarde said this was October of 2018, that winter is here, winter is coming. So, here comes winter, and we'll survive the winter, but thank God spring does follow winter.
Right, I understand. Steve, what were your thoughts? He's right. We see a little bit of a pullback, but still above 50, much better than what we saw in China, where they had a 35.7 level. What are your thoughts?
Normally, I would give you some deep thoughts on the past review of past data, but the reality is right now, it's about the future projections that are going on. Anything that they had that shows what took place in December and January is kind of irrelevant for the next 3 months, because it's going to be around the virus and the amount of, pullback that takes on a state-by-state level at this point. I mean, if we really start seeing the degree of shutdown that we saw in China, all of any projections that we have go out the window at this point, and all of the numbers that came out in January about winter's coming or whatever, it doesn't really matter in the future.
Okay, so Steve, what you're saying is, look, everything's out. We got to wait and see.
It is.
Okay, we expect some sort of dip and pullback. What about 6 months from now, 10 months from now?
Okay.
Where do you expect us to be, Steve?
So I just wrote an article on Friday and said you have to invest right now as if the market's going to overcome the virus, because it will. It always has. It's been given different names over the years. Trade war last year. A few years before that, it was this. A few years before that, it was that. It's always something. There's always some big emergency out there. And the one consistent thing over time is that the markets continue to grow through it and push through. So right now, we're reminding people, don't overreact to this. I'm not saying you should go out there and buy cruise lines today, because they're going to get crushed for months. But you have to take advantage of some of the overreaction, some of the emotion that's going on in the market, and invest for the long term in that sense. Now, if you're a trader, you're looking short term. You're looking at companies like Clorox that are going to sell a lot more bleach for the next few months. But that's going to be a short-lived blip. If you want to buy in on it, you buy in on the companies that have lost 20%, even though we all know their revenues are going to come back. It's just the fear that there might be a slowdown for some short period of time. So to answer your question.
John, I want to hear.
Sorry.
Yes, I understand.
Sorry, 6 to 12 months.
John, give me your thoughts. John, what I saw is that you said the problem may be bigger than the current virus. In fact, the foundations of capitalism in America, I guess, are being threatened to a certain extent. What are your thoughts, John? What's really going on here?
Well, I mean, it depends on how you saddle up, okay? I mean, if you don't need the money or you have the cash to buy the dips, that may be a fine way to go about business. But we also recognize that savvy investors hate losses more than they love gains. So to me, the higher priority is to help people understand, perhaps for the first time, what kind of loss can you accept? I mean, we all know it's going to come back. I don't know when it's going to come back. But in the meantime, I don't want you so depressed you never want to play ball again. So we want to help investors really discover for the first time, is it an 8% loss? Is it a 40% loss that's okay with you? And then design the portfolio so that it might perform within your risk parameters as opposed to what the market's doing. Because I must say, Nicole, the only message that our industry has been successful, and we've only been doing this for 41 years, and really conveying to investors is buy and hold, buy the dip, sit and take it, hold and hope. And I'm just sorry, when we look at what happened to retirees in 2008, 57% loss, 3% withdrawals if you were at 70.5, that's a 60% drawdown. And I'm just supposed to tell you, have a nice day? It's kind of hard to do that.
Right, and I know, John, you don't want people hoarding cash because not putting it to work. So what are you telling them to do?
Well, we want the active management strategies in place that look at our clients' accounts every day. The question is risk on, risk off. In other words, if we're hitting new highs and we're enjoying a melt up, we want to put coal on this fire. But if it's a slowdown followed by a meltdown, as we saw happening fourth quarter 2019, we need to get out of riskier assets. Maybe it's small cap, maybe it's internationals, maybe it means more dividend paying stocks, but to reduce the experience of loss so that you have the cash to buy to enjoy the next upside. So let's discover what kind of loss you can live with, and then put these strategies in place that move the money defensively in a bad year like 08 or fourth quarter 2018, and back in the market right after Christmas 2018 or March 9th, 2009 to enjoy all of that upside, but limit the downside as much as we possibly can.
And then you had some, Steve, some thoughts on technology. You said that retail might continue to struggle, industrials could fall even more, and you had some technology thoughts as well as investors are trying to figure out what to do here in this volatility.
Well, I agree with your panelists. If you have cash, this is the time you use it. I got to tell you though, retail, we've been against retail for a while now. There's no reason. You just had a guest on 10 minutes ago talking about Kohl's. They are in so much trouble, and this is just going to compound it because less people are going to go to the stores than they already were, and that's just going to double down on their problem. So retail, you probably have to avoid that for a while. Technology though, companies like, let's be honest, Amazon, any food delivery services, any places that are going to make it more convenient for people in this environment to not go somewhere where there's a lot of people and buy more product on that level is only going to ride out the storm better than most. I can't tell you what's going to happen next week. I can't tell you what's going to happen next month. But if you are investing for the long haul, these are the opportunities you have to take advantage of. You don't do it when the market's up 20% and you hope to pull off another 2 or 3% out. You do it when the market's down 15%, like it is right now, and today it's rebounding. It wasn't a big surprise. It's down a big chunk. These companies aren't going out of business, but they're getting priced. You can buy companies 20, 30% off right now. Take advantage of that in this environment while you can. And when rational minds come back, then you start slow playing like your guest is talking about, and you don't worry about jumping in on top of already big gainers. So I guess
very exciting. I get it.
Sorry.
I get it. Thank you both. Great conversation. Both of you, Steve and John, saying don't miss it, right? Some good opportunities. Wonderful to see you both. John Grace, founder, president, Investors Advantage Corporation, and Steve Dudash, president, IHT Wealth Management. Thank you both.